All right. Good morning, everybody. Jack Leeson with I'm sharing the wrong thing. Hold on. Jack Leeson with StartupTrading.com. I'm gonna see if I can switch this over here. Here we go. All right. Jack Leeson with StartupTrading.com. It is 9:15 here on the 9th of April, and I'm going to be going over technical analysis trade plan. For those of you guys who are new, we do this every morning. I go on anywhere, usually between like 9 o'clock to 9:15. I go on, do a little video. It's going to be on YouTube, and then I jump in the Discord and end up just kind of sharing my screen until I'm done trading in the morning. But let me move on to the Nasdaq here and my analysis for the day. If we back out, there's a couple of different sequences you could pay attention to. We'll just start off on the daily chart on this higher time frame. This 50% retracement at the lower end of the range here in the Nasdaq is the full halfway back from the lows of 2022. And you'll notice that low in 2022 was also a halfway back, and we spent, the first test of that halfway back was May, and we didn't come out of it till the end of the year. So that was 7 months where the market was going sideways inside of a setup. I would not be surprised to see something similar, for the rest of the year. We actually just end up basing under this, but this 16,467 is the most important level for it. Moving from the halfway back, so we began our sell-off last Wednesday, Liberation Day as they call it. Absolute destruction of price in the overnight session, and what I've noticed is that yesterday we had a little bit of a divergence between the Nasdaq and the S&P, and this ended up being the selling point for these indexes. Now, there was our fake news event on Monday, delay in tariffs for 60 days or whatever it was, turned out to be false. But anyway, we ended up creeping our way up towards that level at the open. Now, what didn't happen on Monday was the S&P didn't trade the same setup, which is retracing half of the move from the beginning of the move, or the beginning of the change in tone. Clearly, last Wednesday was a change in tone in the market because that's when this information had come out, and it's going to be the determining factor for the macro idea or the macro fear, whatever you want to call it. The ES had not yet traded that same setup, Wednesday's high to low. So yesterday, while I was giving my presentation, actually, we creeped above the prior day's high, creating that divergence. New high in the ES, no new high in the Nasdaq. So that is going to be the higher time frame setup that I'm watching. For the S&P 500, that eventual target is going to be a 4609. And for the for the Nasdaq, that target is going to be 15,614. At this point in time, as long as we hold below these 61% lines here, these yellow lines, we will eventually complete that if we hold below these. Coming out of yesterday's high, we're going to dissect some of the smaller time frame. We're above what's called the lower or the upper mid. This orange line means you're basically on the top 25% of the prior day's range. You're above the quarter of the percent, the highest part of the range. If you were to divide by the prior day's range by 4, you're in the top fourth of that range. And we came out of it and began just aggressively selling off on the smaller time frame, and had this extension here from what was the 11:15. If you guys were in the room yesterday, I was drawing this. We traded it coming out of lunch, and then we ended up going into a same anchor or a new extension. That extension broke, and this extension was used again. So the 11:30 low to low in the overnight session has come into play. Now we're going to have two things here. Either we're going to hold this extension off the open, or we very well could be doing a liquidity sweep. And if we liquidity sweep higher, take out those overnight highs, okay? If we take out overnight highs, I'm fully expecting us to run up into the full 50% retracement short at 17,547. A lot of times when you do have these overnight ranges, we can break out of them before retracing back into them. But a break of an overnight out of an overnight range here really wouldn't be something I'd want to be a continuation buyer on. In fact, I would just wait for us to hit this 17,546, then begin looking on the smaller time frame for selling pressure. So if we break out above 17,546, I'm going to begin looking for potential short opportunities. My bias is bearish here. It would take a lot to change it. Even if we rallied higher, I'm going to be under the assumption that eventually that rally higher is going to retrace lower, just like it did yesterday. That rally higher, was it truly bullish? No. Was there a move in the overnight session higher? Yes. What was the real move though? This is the move off the open, you know, couple measly 100 points to the upside, and then we basically have I mean, was that another 1,000+ point move off the? Yeah, I mean, it was another 1,000 points plus into the end of the day. Pretty incredible. So 1,000 point move lower, and as we go into the day, I'm anticipating this area to act as resistance, and for us to get down to what was the retest of the lows on Sunday. That Sunday night low. I would like to see an eventual retest, and it would be great if we could sweep below that retest. But the scenarios I'm looking at, potential, either we're going to move up, sweep this overnight high, and then just reverse really, really hard, or steady selling, consolidation, and then an eventual move down into lows. But my bias is bearish here in the Nasdaq, as it is for the S&P. These markets are correlated. You really can't be bullish one and bearish the other. And then you have in the ES here, once again, we have this full 50% retracement short from the beginning of the announcement of the tariffs, and they've only accelerated since then. So the market's still uncertainty. Also today we have bond prices rising with the market falling, which is like an absolute disaster for really everything. You know, it's just one day. It's just one day, but when you have bond markets rising with markets falling, that's pretty rare. I'm just moving some lines around here. Now for the S&P, as we came out of that resistance level on the prior day, we had that new high in the ES and no new high in the Nasdaq. That'll be something you want to look for here today. If we do get a new high in the ES and do not get a new high in the Nasdaq, the ES has the same extension. So for those of you guys who are new, I use a lot of Fibonacci sequences to determine potential entries and potential targets. And we had what was the 1130 low of the prior day, the same time as the Nasdaq, drawn to what is now the overnight low. That 50% is an entry, and the 38 can be used as an entry as well. As we're going to the open, we're right at that 38% retracement, which also lines up with that lower mid-quarter, this green line here. And that downside target is 47.96. 47.96. Okay, so 47.96. 50.32 is at 50, and those are going to be the downside profit targets off of this move if we hold. Now, the other scenario is going to be very similar to the Nasdaq, which is the potential that we actually squeeze up into the full 50% retracement short, which is going to be a 50.88. The volatility in this market is clearly the highest any of us have ever seen in our life. So I'm going to continue to make comments throughout the day. A lot of new people here, so just for anyone who's new and also anybody in the room, after I end the video, I go on Squawk. I don't talk all day long on Squawk. I really only talk when I see something interesting. But for you guys, I'm going to aim to do a review, a scheduled review, and I'll post a schedule. But off the top of my head, we have the open. I'll make comments at 10 o'clock. And then I'll make comments again at 10:30, and then I'll make another comment at 11:30. Then the doldrums will begin. I'll be probably silent until after lunch, and then we'll do a 1:30 review and a 2 o'clock comment. So I'll post that in the room, so just so kind of everybody knows that's when I will be on the mic as my own schedule. But of course, I'll be answering questions in between that if there is some pertaining to the market. And for those of you guys who are new, if you have questions like that are like about your account, what you can see, just DM me. Do not put them in the trade room. Do not flood the trade room with that. If you have like the main trading room is for trading room conversation, and I will be putting people on temporary typing bans if they're breaking that. So I do not want to cloud it. Anyway, I'll see you guys in the